Welcome to Markets Tomorrow, the daily stock market analysis show. We look at what happened in the market during the day, try to learn something from it, and then plan for a better trade for the next day. So we had a bounce up, big bounce. Is that a dead cat bounce? Is this bounce going to sustain? Let's analyze the charts and see. And this is an analysis for December 27, Tuesday, the last Tuesday of the calendar year. Let's get in and see the charts. Right. So plain charts, yes. This is a very beautiful wide range. You can say it's almost like a engulfing, but some profit booking happened 3 p.m. Otherwise, it would have been an engulfing almost. Right. So wide range bearish, wide range bullish green candle bounce after 3 continuous days of heavy fall of 700 points or above. Nifty. Same Banknifty. Banknifty had seen big loss. Right. The loss amounts to 3 days of selling is amounted to 2,000 points lost. Today it's half of that is gain. It's almost 962 point gain. Right. 2 days of loss is recovered and only 1 more day is left. That's what the banks did the job today. It doesn't look like a dead cat bounce because it's a big bounce, bigger than a dead cat. Dead cat normally would not be such big 960 kind of point gains won't happen. So this seems to be probably at the end of some correction, which extended to nearly 6%, and that's what you should read from the charts. So the correction has happened, and probably we may consolidate for some time and then slowly take it out the higher levels, each resistance one at a time. That's what we can infer from this. But we may not expect that to happen immediately on the next day after such big moves. When such huge buying happens, the following day normally would be like very small moves may happen with some kind of consolidation before it moves a bit. So that possibility also cannot be ruled out. So we talked about change in priority bounce that could happen, and that's probably what that may be happening. Let's look at the weekly view. The week has just started with a beautiful reversal from a major support zone which happened with the breakout zone of which sustained for multiple weeks, making a new fresh all-time high. Same with Banknifty also. We had this resistant trend line which broke out way back in November month, and then it sustained for some period. Multiple all-time highs made in Nifty, and then beautiful bounces happened from the same exact location. So there is a good chance that it can sustain. That's all we can say at this point, right? To answer this question. But markets also always surprises you, so charts tell you that there is a possibility that this is not a dead cat bounce and it could sustain, because Banknifty showing very good strength. Probably the COVID fear triggered such big sell-off, and we had been telling that the Fyers did not sell. DIs also did not sell last week. Did not sell in the sense did not sell too much. The selling has happened from the panic from the retailers. That's what we talked in the weekly analysis, and it looks like that because a good amount of buying might have happened from the Fyers today. Data has not come in. So Fyers, good amount of buying might have happened from the DIs basically, because Fyers might be on holiday because it's a Christmas holiday. US it's holiday today, and that's it. So a good day for the bulls, and it was not a trap also, right? It was not a trap where it went made a dip and then trapped the peers. That did not happen. It almost went down till almost at the small trap was there, but not a big trap. It went a little bit below the previous candle's low, but it was never a big trap there for the bears. But it did reverse. That's what I can say. Intraday also it was trending. If you look at the 15-minute charts and Nifty and Banknifty, you can see it was trending. Except the 3 p.m. sell-off, profit booking was there, of course. Just one big red candle, otherwise it was trending up most of the day. Look at the say change in polarity. We had talked about that and all that. We talked about this. Again, all these levels 18,000 rounding number and 18,085 is the previous week high. Fibonacci 38 would be a good resistance upside. 18,260 would be another resistance upside. Previous support, that is. And downside supports would be 17,734 previous week low, and Fibonacci 50 also coincides somewhere close to that, and 17,570 and 17,642 would be supports around, which coincides with the Fibonacci 61 also. Banknifty 42,961, 43,000 rounding number would be previous week high resistance, and then 43,339 would be the resistance above that. 41,587 would be support downside, which also matches with the Fibonacci 38 retracement levels, which could act as a support, and then 41,884 to 41,000 would be a rounding number, and then that's a previous swing low as well, and that can be a support. Bollinger Bands are still expanding on the downside, so it's still bearish on both the indices, no doubt about that. So the bias is bearish, no doubt. Momentum also had slipped to the bearish zones, but now it has climbed back with the sideways momentum on both indices. Trend has not turned back, it has not crossed over, but there is a dip in the strength of the trend in the case of Banknifty, but Nifty still, the strength of the bearishness is rising, so it's in the DMI 90 zone still. Trend has not turned. So trend turning would not happen in one single day, how big the moves at. So trend is a lag indicator, and then tomorrow will come to know whether the trend has climbed, has crossed over, is going to cross over back to the bull zones or not tomorrow or the later days. It's just a 1 day's moves that has happened, right? So we stayed flat, did not cool off too much. It's at 15.93, very close. There's 16 above, very close. So it's flat day of 1.4% down on the VIX. Long build up, of course, on both the indices and the futures options. Futures OI, open interest. And look at these levels for the options OI for the 29th monthly expiry, December 29th. 17,000 to 18,200, such a wide range. That means the option writers are not sure. Market could move up or it could fall big to the 17,000 levels. That's what the option writers are saying when they are making the writes on the put side and the call side. Right? 42,000 and 43,000 is not that big range. But that's what the option writers are looking for, support and resistances by writing put and call options on the Banknifty, right? So 0.86 and 1.29 put call ratio is bullish back. Bullishness is back, right? You can say on both indices, it's little extra on the Banknifty, you can say. Sectoral watch, if you see pharma sector fell 0.84. There is only sector that is moving when the market is moving down now. Now that the crowd fear is digested formally, pharma had fall back, and all other sectors are green today. IT moved 0.5%. That is the least move, we can see. Right? So bigger moves happened in the auto, metal, realty, FMCG. They all moved like what is shown there, like auto 1.4%, metal about 2%, 2.5%, realty, FMCG 1% move. So that's across sector moves happen except in the form. IT, auto, and realty remain in the bear zones from the momentum perspective of the short-term daily charts, but all of the sectors are in the sideways. So the three sectors easier to climb in the sideways at least. Right. Heavyweights also, except the Kodak Bank, which fell 0.5%, not much. All other heavyweights closed green. HDFC made good moves, nearly 2%. HDFC Bank did a good move. HDFC also good move on more than 1.5%. Reliance nearly 1%. Infuse kind of flat 0.35. TCS also less than 1% move. ICICI Bank did well, 1.63 move. So it's Infi and the Kodak which are the bearish ones on the daily charts from the momentum perspective, but others are all in the sideways zone, right? So Infi may take some more time to climb for the US market pick up to get some cues on what it has to do next. The IT sector, right? So that's about the heavyweights, and then institutional participation data announced has not come in yet. Hopefully, it must be the DIs that might have bought in today. It's not clear yet, right? But the last data that you see is that there's not much of big selling that has not happened last week. I'm reiterating that fact. The kind of downfall that we had 3 days of big mega 2,000 points kind of Banknifty moves that happened just because of panic profit booking that happened from the retails, and it was the DIs who are actually buying heavy, 3,000 crores of gold today. Today's data we don't know, as I said, and the Fyers are selling small, even on Friday, right? So it's just panic, and that should be over by now, right? And so we'll wait for the FI data till the end of this video and check if it is coming or not. As of now, it is not coming. So crude oil is rising up, but still below the 80 levels. So if it climbs above that, we need to worry. As of now, it's kind of slow, sideways momentum what it has got. Dollar index is flat trend as of now. Slightly pull back, and some reversals has happened in the dollar index, but it's not reflecting on the currency pair, USD and currency pair. Still the rupee is weak and flat red, with bullish momentum continuing to be there on the USD and gold is kind of flat, consolidating after having climbed up a resistance and having bullish momentum in the short term. This is flat red, and the US index sell flat. It's a holiday in US today, so no market cues will be there for the Indian markets to rely on, to look for the next day. So it will be pure local clues that may be traveling, but those markets are having a descending wedge. We had seen that the Dow Jones, for example, on the weekly charts. If you see, you can see that there is a descending wedge in the reversal, and the US index is trying to hold on and attempt to hang on there. But it may be evident that eventually it has to fall down to this. Right? Otherwise, it has to not close with a red below this resistance zone. If that happens, it may work out. But the Dow Jones seems to be very weak. Right? The momentum has fallen to the bear zones on the Nasdaq as well. Right? So Nasdaq is showing weakness. So got to keep a close watch on that. Next trading day after that, at least tomorrow, day after tomorrow morning, we'll get the cues. That's what US indices and global commodities are talking about. It remains that today is a US holiday. Jobless data is coming on Thursday, December 29th. Two stock picks for the next day. So that's one is Techum, and that's a short call, and HDFC Bank, it's a long call. Let's look at the HDFC and see what is that. So let's quickly look at the two stock picks. One is Techum, and what's Techum showing? It's weak. Momentum is in the bear zones, right? And it's kind of resisting below the RSI 40. It has been falling down since that head and shoulder that is seen on the weekly. It's a support zone, so you have to play it safe and have the stop losses right at the gap area if you're playing on a positional bet. But short swings always exceed if the price moves above the two candles up or one candle up high. Right, so that is stuck M short side, and HDFC Bank. Look at this, it's bullish. It's a flat pattern. It has been consolidating in the last days, big fall Fridays. Hasn't really affected. It's still a flat pattern, and breakout is possible. But remember, there is a big resistance zone. Pushily, if you play, it may give reward. The moment it breakouts, it will be really big, because it has been consolidating in this box zone for a very long time. Look at this, it's still bullishness, and a posterior reverse divergence is still there, and price is absolutely bullish. HDFC Bank, right? But always have the stop losses below the last candle that bent below this flag pole, the flag area at the bottom. So somewhere 1550, if you put stop loss, it will be rewarding. Alright, swing trades that may extend to 1 or 2 weeks max. Right, so let's see. Call, Techum short, HDFC long. Just to wrap up, now that we have studied all this, today what we saw was a short strength by the banks, especially 960 points, big bounce up after 3 days of big fall. So So, and the thing is that weekly, the place where the bounce happened was exactly where the weekly candle had broken out earlier. So that's a change of priority. Bounce that has happened on a weekly, and the bounce of candle is wide range bullish. So definite bullishness is back from the price action, but not yet from the moving averages and all other parameters. Like they still need some more time to catch up because Bollinger Bands is still downside indicative. Price is less than the moving averages. Momentum is weak. Trend is still bearish. Rupees weak. Crude is spiking up. US market resistance on holiday. Less volumes. And so the view for immediate tomorrow is my bearish. Right? The VIX is spiking up 15% last week. You know that, but it is still flat. Today it is still flat and is not shown much reaction to anticipate on the VIX. Right? So the levels to watch is what we can do: 17,500, 18,500. These are 1,000 point range where the markets will move on in the next few days. 41,500 and 43,000. Banknifty similarly. So always hit your positions, as I say. Play it safe. Cut 20% price if it spikes. VIX spikes above 20. That's it. And investments, protect them. Long-term investments, quality investments, protect them. You can play by using the option strategies that's mentioned in the playlist of the videos. You can check out that. So that's the view. Mild bearishness continues. The chart does not say that the bullishness is back. So otherwise, it is a good green day today. So I hope this study of the market has helped you in some way to make a better trade plan for the next day. If it has helped you in some way, consider the like button and share it to your friends, colleagues, so that we get a few subscriptions that could motivate us to keep doing this every day. Thanks for watching. Happy trading, happy learning, happy investing.